Palantir just had one of its loudest weeks of the year. A new AI partnership with NVIDIA, a central role in the US Army's next command and control system, and a fresh Wall Street upgrade that called the stock a gift. 35 analysts now rate Palantir a moderate buy, and their average price target sits near $191, almost 48% above today's price. But here's the part almost nobody talks about. Over the past 12 months, the number of Palantir insiders who bought their own stock is exactly zero. Meanwhile, 7 insiders sold more than $676 million worth of shares, including a $54 million sale by the chief executive himself. So who should investors believe in, the analysts pounding the table or the people running the company? We ran Palantir through our fair value model to find out, and the number it produced is nothing like the one Wall Street is selling. Here's how the model works. First, it measures quality, how strong the business really is, across 3 areas: cash flow health, growth health, and profitability health. Then, it takes those quality scores and works out what the business is actually worth, using only the earnings Palantir has already delivered. We start with cash flow health, and Palantir is a fortress. It turns 52 cents of every sales dollar into operating cash. Nearly all of it survives as free cash flow, and it carries essentially no debt. The block scores 8.6 out of 10. Next is growth health, and the numbers are absurd. Revenue is up nearly 68%, operating income is up 391%, and cumulative earnings per share have grown more than 400% in 3 years. This block scores 9.2 out of 10. And in profitability health, Palantir is elite. Its gross margin is 84%, its EBITDA margin is 38.6%, and its return on assets ranks in the 99th percentile of the entire software industry. The block scores 9.3 out of 10. Put it all together, and Palantir's weighted quality score lands at 9.0 out of 10, an exceptional result for any company we have graded. So that is the quality. Now the price, the part that decides everything. At $129 a share, Palantir trades at roughly 150 times EBITDA and about 135 times trailing earnings. To be fair, that is below its own 5-year average, but that average was set during the AI mania, which is exactly why the model caps it. So how does the model turn all of that into a fair price? It starts with Palantir's elite scorecard, which earns it a 48% quality premium, meaning a business this strong deserves to trade about 48% above the typical software company. Then, it builds 2 separate fair values. The first is based on cash earnings, EBITDA, and it works out to about $68 a share. The second is based on net profit, the price-to-earnings lens, and it works out to about $64. Each one blends the software industry's own multiple with Palantir's history, capped so that bubble-era prices cannot sneak back in. Average those two, 50-50, and the model produces a single blended fair value of $66 per share. Against a market price of $129, that is downside of roughly 49%. And before anyone calls that one cherry-picked assumption, here is the full range. Lean the model 70% on Palantir's own expensive history, and fair value rises to $91, still 29% below the market. Lean it toward industry discipline instead, and it falls to 41. There is no weighting under which Palantir looks cheap today. So which number should you trust? The model's 66 or Wall Street's 191? It depends on your risk. This model prices what Palantir has already delivered. Wall Street prices what it might deliver next. If you want a price backed by results that already exist, the model says overvalued. But if you will bet on the growth continuing, you follow the analysts. And the last 12 months already showed the risk. The stock fell roughly 27% this year while the business posted record numbers. The company did not get worse. The multiple got smaller. Palantir is an exceptional business at a price the numbers cannot yet defend. At today's price, investors are not paying for what Palantir is. They are paying for what it has to become. If this breakdown helped you see Palantir more clearly, then hit subscribe and tap the bell so the next verdict lands the moment it drops. Here, you get real numbers, real verdicts, and zero hype. This is the valuation verdict.